number one reason why people struggle to build wealth is that they don't understand the time value, which is part of the financial engineering theory. The time value is the basis. So the time value of money is important because essentially means that $1 today will be worth more if you invest the $1 today versus having the $1 tomorrow, for two simple reasons. First of all, if you have the dollar today, you can take a position, make a decision, and invest the dollar. The dollar can start compounding, start appreciate, and essentially start benefiting from the appreciation of the asset that was allocated towards. The second point why $1 today worth more than $1 tomorrow, if it has been given to you, is the inflation. Every single day, the dollar in form of a cash is essentially losing value. It's losing buying power. So effectively, if you want to purchase these sunglasses, right, you like this pair of sunglasses, you kind of wait for discount or for promotion or for certain sale. Let's say the retail price of these sunglasses this year in 2026 is, let's say, $250. And you wait for promotion and you don't see the promotion, or when the promotion actually is running, you don't have money to buy them. You wait and it's next year, it's 2027. The retail price of these sunglasses could be $300. Okay, so the retail price is essentially going up, and even if you get some deal, some discount, you're still gonna be paying more if you purchase the glasses back in 2026. What effectively actually happened, I can give you also another example. I bought this watch during the summer. That's Omega Swatch 1965, just a random purchase, and I haven't looked at it. Last week I was planning to sell the watch because I don't really use it, and I look at it on the site of Swatch, the price is already up. It's like $50. So the inflation, this is a real example, has played out. This is not a limited edition watch, right? You cannot buy it online, right? You have to sneak and wait on the lines in the stores, in the retail locations. Still, it's not a limited edition. So if the watch value appreciate without the watch being effectively more valuable from the summer I purchased it, this is your example of how the time value of the money is very, very important. So because I purchased this watch during the summer, instead of having the $300, I bought the watch. So if I waited now with the $300, my $300 could be worth $280, $285. This is what this $300 could buy right now, because the prices are even higher than the summer. If you go and try to buy the grocery and you fill up your basket or your cart with the same groceries, I bet you will not be able to fill the same amount or same type of groceries. But because I put the $300 into something, right, this something now at least will give me back the $300, simply because people cannot buy it from the store and they cannot buy it on the retail price I bought during the summer. It's a very simple, I believe anyone can understand and comprehend this very simple example. Another example I gave you with the glasses, same thing, right? Procrastination plus time value equals usually bad deals. You will hear from time to time people say, the person who is more patient, who can wait longer, gets the best deal. This is not usually the case. People who waited, imagine you were born in 2005, 6, 7, during the big blowout on the real estate market, right? You were thinking, okay, I'm gonna keep waiting to get the best deal. You know, when the banks take possession of the properties who have been returned from the owners, right? And you will be expecting to make a short sale, buying the property directly from the bank. Never happened. People who were waiting for the best deals, they never get into. People who were waiting for the Bitcoin when the Bitcoin dropped from 12,000 down to 5K, they never get an opportunity to buy it back at that price, right? So sometimes things are overdone, but usually they're not. This is why learning about time value is very important, especially in times where the inflation, it simply has no dips. Inflation is either consolidating at a very high rates, even now, regardless of the reports of the CPI, regardless of the real inflation, regardless of the reports about the core inflation, everyone agrees that inflation is much higher than the reported number, which means that the amount of money that have been printed, which is substantially larger than combined goods and services provided versus the money in circulation, means that inflation has peaked so high and has consolidated so high that it can't really fall that low where it was before, because the economy has grown and outgrown the previous economy. And when I say economy, you can simply speak the money circulation, the GDP. You can speak in terms of money that are coming from the tariffs, right? The revenue that the government collects from tariffs. And the economy has outgrown a lot of the previous numbers. But remember, the money printer and all the money in circulation that was added didn't actually have equivalent in goods and services. So you got more money, but you have the same amount or a lower amount of goods and services, which essentially meant that people have more money, there's nothing to buy. This is also something what happened during the virus situation. A lot of people got stimulus checks, but there's nothing to buy. Everything is out of stock. So this is why understand time value, apply time value to your own personal financial planning, and understand when is the right time to do the move, when is the right time to wait, when is the right time to be active, when is the right time to sit in cash, and when is the right time essentially to reduce the amount of cash in your pocket. Because like I said, if I had the $300 right now, I have already lost 15-25% probably of buying power. But because I have the watch or I have something else, I have the glasses. This is why sometimes when you get a deal on something that people usually buy, right? Let's say you find an amazing deal on water bottles, right? You get like very nice branded water bottles, maybe 24, 36 pack, and you buy them all, everything that you can buy. Why? Because first of all, you can always resell it. People always gonna buy water, and the second of all is worst case scenario, you're still gonna get used of them instead of you buying the water for yourself, paying full price later on when there is no sale. I was watching Mark Cuban. He said that every time when he goes to shop, to the groceries, whatever is on sharp discount, everything that is over 50% off, he said he buys as much as he can buy, and he store everything. And they asked him, but why? You're so rich. He said that's effective savings. If you can buy something in the very moment that you would usually buy throughout the year, and it's 50% off, you effectively save 50%. Why wouldn't you buy it? This is again a billionaire's mindset. It's not we try to be cheap, we try to be stingy, we try to play the game. No, it's the numbers. At the end of the day, if you save $5, you essentially have $5 more in your pocket. Pay very close attention. The people who invested in silver early on during the previous hype cycle waited 13 years just to break even last month. This is your big cautionary tale over here, because a lot of the people who currently talk about precious metals investing, hedging against the debalancing of the US dollar have no real perspective on the historic run-ups in the precious metals. Remember, these things are not getting more valuable. No one is actually looking to buy more, to hold more, to produce more jewelry or produce more electric batteries with more silver, etc. Right? The idea over here, which is the same concept that aligns with palladium, same concept aligns with gold, is that everyone is kind of scared of the inflation, which of course it is a big money eater, wealth eater. But read this with me, and I want you to think about it, okay? You can even pause the video and read and comprehend and even probably take some notes. Silver prices peaked at $50 in April 2011. So the idea over here is that the current peak that we saw right before the dip last week, which erased gains for at least 2 weeks prior, is something that always happens. That's not a one-time phenomenon. The same people, which are institutional investors of course, who are pumping are the same one who will correct the price in a very moment. So every single day I'm asked the two exact same questions from different people. Question number one, why the stock market is slightly but continuing going lower and lower. Second important question is why the crypto goes down. Continuation of the geopolitical tension makes sense crypto to be the only safe asset, of course, regarding of the gold. Why crypto goes down, why the stock market goes down. Because if you just use the simple logic, right? There is a geopolitical tension, there is a problems countries between countries, wars, etc., right? So the crypto should be in huge demand because crypto allows countries to transact independently, regardless of what kind of sanctions one country you can put to another. If they buy crypto, if they hold crypto, they can transact with other country and bypass any restrictions or sanctions. So why the crypto doesn't go up in this particular geopolitical war type of situation? Well, simply because the crypto has matured. I'm going to speak slowly so you will be able to understand. Before, crypto was extremely volatile. The beta of crypto was much higher than the current beta of crypto versus the stock market, meaning when the stock market usually before went up, the crypto went down, and vice versa. Now the crypto market has matured substantially. There's a bunch of ETFs for the Bitcoin, ETFs for Solana, ETFs for the overall crypto market cap. We have international ETFs have been filed as well, ETF for Solana. So the crypto market has already been adopted. Like it or not, financial, individual, nationalization, institutions, everyone is talking about it, everyone knows about it. It's not something new. It's not this crazy high beta alternative on the market. Second important element over here is that people are not quite sure that even if they buy into crypto, even if countries are buying the crypto, so they will be able to stack up for transaction over the sanctions, bypassing all the restrictions and geopolitical tensions, it's still not gonna be volatile enough. Not to mention that the Clarity Act failure so far has pushed not only the crypto itself, but stocks and companies related to crypto. Look at the Circle, which today, as you probably aware, not aware why Circle stock went down, was that there is a competitor for the USDC that was just released that most likely will not play out as a direct competitor because we all know there is already infrastructure built in this particular sector. Why AVAX went down, when AVAX is probably the highest probability play on this crypto cycle. Consideration, we saw the last year for $500 million Anton Scaramucci and his fund invested for tokenization utilizing the AVAX, right? There's so many different projects that have the highest upside potential. Regardless, do you know more about on-chain or off-chain, regardless you're interested in DeFi, but you still understand why Wall Street is investing more and more into the crypto infrastructure and different blockchain systems, right? Sure, it will take a lot more money to push Bitcoin from here to double or triple from the recent all-time high. Sure, why? Because there is much more place with greater upside and lower risk at this very moment. Also, stock market, if you look at the stock market, let's go back to the stock market. The stock market feels that it's going slowly but surely lower and lower. But if you look at the grand scheme of things, look at the 3-month chart, look at the 6-month chart. The stock market is at almost all-time high. So why the heck market feels that it's going slowly but surely down? It feels this way because there are very few stocks that are actually crushing it. Very few stocks are in the position to make new all-time high, where a lot of other sectors are actually falling apart. So if your portfolio consists of 50% of these sectors that are underperforming the market, it is naturally for you to feel that the market is not going up. It is naturally for you to feel that the market is kind of preparing for recession, which may be, but most likely won't be the case, because there is an artificial sentiment that creates fear, because there's just a couple of plays that are actually benefiting from AI. There is just a couple of real revenue sources that could be validated and double checked prior to the actual IPOs of a lot of these AI companies this year. So this means that the fear is something that is the easiest to buy at this moment. The fear sentiment is the easiest to bet on. Very few people will go out and try to build up the case or even try to go long. Not to mention, almost every single week, a bunch of people, hundreds of millions of dollars, are liquidated for long positions on the crypto market. Every time when somebody goes long on crypto, on leverage, all this potential exposure on long liquidation is the easiest to target for shorts. Why? Because the market is not ready to set sail for the long run. What's supposed to happen? This is exceptionally the second most asked question after I explained to this briefly. The people who ask me, well, the second important element here is that you have to reduce, first of all, the friction for crypto going higher. So you have to resolve the issue with Clarity Act. You should not allow bankers to interrupt the crypto issuance or the yielding or the derivatives that are coming out of holding certain cryptos, right? Not preventing the DeFi projects through the Coinbase or the other platforms, right? The DeFi should remain free, and the freedom for transacting or yielding or taking part of some DeFi projects should remain as freely as it is. Second important element, of course, we want to see that the market is building negative beta towards the crypto market. We want to see dissolve from this particular asset classes. We don't want to see this consolidation. We don't want to see this matching price action and essentially going in the same direction. This completely destroys. I understand that the maturity of the crypto market is kind of good because you have a lot of people that are not afraid to invest in crypto anymore. But the second important element, which was which is the actual volatility, is no longer here. The volatility index and the sentiment of people getting hyped, if you just look at the Google Trends and the search keywords for crypto or for Bitcoin, is almost lower than prior to the virus situation. Which again, people are not thinking about this. People, I bet you, they're not even looking at their portfolios, either they're up or down. Crypto they bought probably last 2-3 years, because they feel that there is no sentiment. If there's something huge popping up, if there is some wave that probably will change something, it will be coming on the news. One day you're gonna start seeing article by article or line by line or title by title, little by little push about crypto. Oh, is this the new crypto cycle forming in? Is this a bullish pattern forming in? You're gonna start seeing bar chart. You're gonna start seeing all these research and analytical companies making predictions. So look at this pattern, look at this setup, this, right? It's nothing coming up like that. There's not a single article. Just go on all the landing pages for all these research companies. There's barely any information, any article, any blog post about crypto. It's all about focusing on gold right now, because there's a lot of fees associated with people buying into the gold ETFs, silver, palladium. People are hyping about copper. Yesterday I was searching on Bloomberg Terminal. A lot of people are trying to hype the copper trade, and they don't really buy the copper. Let me clarify. These people hyping up 4-5 different stocks that are kind of associated with the copper trade, because the copper is in huge demand and there's a scarcity discrepancy between the demand for production and for the utility of the copper and the actual copper prices of these stocks, because the stocks related to copper are much cheaper. There's potentially higher upside than actual buying the copper. Same thing with gold, same thing with silver, same thing with everything. But again, don't forget what happened 3 or 4 weeks ago, the biggest dump on all the precious metals. Remember, there was a huge red candle in palladium, which returned, or like not only lost the gains, also went lower than the previous consolidation level, broke the previous support of maybe 1 year ago, something like this. So you need to understand that the same players who pump particular stocks, who pump certain cryptos, they are after the precious metals. So the same game will play out the same. There will be dumps along the way, but it will not go higher and higher without any particular major sell-off further down the line. Same thing happened with Bitcoin, right? So this is why crypto market currently is kind of stagnated, kind of going lower. This is why the stock market is down. And again, January is usually a very good month. The year starts very, very well. Last year, 2025 started very, very well. We had a very good price action till March, and after March, everything dumped. April, May, June, slow. Summer, we had a good September, and then October, November, December was dump again. So if you do a simple recap, you will see that we barely had maybe 3 good months of the whole 2025. I don't know, let me know what you guys think about this.